Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm monitoring. It is to do with the exchange rate between the US dollar and the Japanese yen, because for fundamental and technical reasons, pretty much to summarize my trade idea, I am very much expecting it to continue moving to the south. Before we talk about the fundamentals, let's just talk about the technical picture here. It's very, very bearish in my opinion. We're still moving lower within this trend channel, which has been respected very, very well in the last couple of weeks and months. We've got the 21-day moving average here, which continues to act as resistance as well. Consistently rallies continue to be sold. For now, you've got 130, or this level of support here from August 2022, just above 130. That continues to provide support. It has provided support on 3 occasions. The 130 level is psychologically important. These big round numbers, traders do tend to trade around these big round numbers. But it looks as though the sell pressure is building above this level. You've got a descending triangle, which is often a precursor for a bearish breakout, which I think could potentially come very, very soon. And my target would be this next area of sort of support, but it's from these lows back in May and this high back in March of last year, and that's in the 125 to 126 area. That's where I think dollar yen is probably headed. In terms of how to trade it, I'd be waiting for confirmation of the break below this 130 support area. Then I'd be waiting for a bounce and a retest, and then that is when I would be adding to my short positions. But in terms of the fundamental picture, why am I thinking I'm going to be moving lower? Well, let's talk about let's talk about the latest US data which just came out. Okay, so the US CPI report for December, as expected, fell to 6.5% from 7.1% in November, year over year. As expected, month over month, prices fell 0.1%. And you can see the core month over month was in line with expectations as well. So this data, while not a shock to the markets, which is why we haven't seen this breakout happen today, because this was priced in, it's very much in fitting with the idea that inflation in the US continues to fall rapidly. Because, let me just show you the chart. You can see inflation's been falling pretty much every month since July 2022, where it peaked at 9.1% year over year, the headline. We're now at 6.5%. That is a lot of progress. We've still got a long way to get back to the 2.5% Fed goal. But, if we continue as we are, we could be hitting that goal this year, potentially. So traders now aggressively betting that the Fed is going to take a slower pace of interest rate hikes going ahead. You can see interest rates currently 4.25 to 4.5%, and there's a 92% chance, according to options markets, that it's just going to be a 25 basis point hike at the Fed's next meeting next month. Now, you can see that before this data, it was closer to 75%. So markets were still expecting a 25 basis point, but markets are just much more certain now. So, with the Fed slowing its pace of rate hikes, with markets very much focused on potentially rate cuts coming later in 2023 or in 2024, as inflation comes under control, as the US economy slows. Because remember, we did have those PMI surveys come out last week and they were weak. So the US economy is slowing, is probably going to head into a recession. I think this downtrend in dollar yen is going to continue, not to mention the fact that we've also got the BOJ, which appears to be shifting towards potentially moving interest rates back into positive territory. So, I think it's a perfect storm for dollar yen to keep moving lower. So, yeah, guys, hope you enjoyed the video. Hope you all found it informative, and I'll see you all in the next one.